AI just weighed in on 3 hot tokens. According to Crypto News September 5th report, China's DeepSeek AI published end of 2025 price calls for XRP, Ethereum, and Picoin, and the numbers are already stirring debate. Let's start with XRP. According to Crypto News recap of DeepSeek's outlook, XRP has a credible path to $5 by year-end if a US spot ETF is approved. The article notes that 2025 has already been a breakout year for XRP, including a surge past $1 and a multi-100% run. It also flags a large whale transfer linked to Kraken and points to growing adoption signals like an XRP MasterCard pilot and new app activity via a base XRP Commons link. On the tape, the same piece highlights $3.60 as a key resistance to reclaim, with $2.50 and $2.30 as important downside levels that bulls want to defend. The takeaway in the Crypto News write-up is simple. ETF momentum plus improving on-chain activity underpin DeepSeek's bullish call on XRP. Now Ethereum. According to Crypto News, DeepSeek frames ETH's recent action as a textbook correction after setting a new all-time high near $4,950 in August. Price cooled into the $4,000 to $180 support zone, and the roadmap from here is clear. Reclaim for $1,490, then challenge for $1,700 for $1,800. If buyers clear those hurdles, DeepSeek sees room toward $5,100. Technicals in the article show RSI near the low to mid-30s consistent, with an oversold bounce while MACD is still negative, but close to flipping. In short, the Crypto News summary of DeepSeek's view is that ETH looks shaky in the short term, but the higher timeframe trend is intact if key supports hold. Picoin is the wild card. According to Crypto News, DeepSeek believes Pi can make a run toward $1 by year-end, leaning on its very large community and recent builder updates like a Linux node release and Pi App Studio for easier app creation. The same piece notes that Pi is still down sharply from prior peaks around 88% off the early highs and lays out resistance levels at 80 cents, $1.10, and $2.50 that need to fall before any bigger upside can stick. The article also mentions stretch chatter about higher numbers circulating in social feeds, but the headline call attributed to DeepSeek is a return toward the $1 area with plenty of volatility risk along the way. A quick reality check before we wrap. According to Crypto News, these are AI-generated predictions, not guarantees. The piece also reminds readers that crypto is high risk and that September seasonality plus macro uncertainty can whipsaw prices. What actually validates the bullish cases are the usual tells: real ETF approvals and flows for XRP, sustained support and new highs for ETH after this pullback, and tangible user growth and dev traction for Pi. Watch those fundamentals, not just the targets. Bottom line, according to Crypto News summary of DeepSeek's model, XRP has a $5 plus path if an ETF lands. ETH can re-challenge highs if for $1,280 support holds and for $1,490 for $1,800 break, and P's base case is a fight back toward $1 if community and builder momentum translate into usage. Treat the numbers as scenarios, manage risk, and let the market confirm. You've been watching Cryptozard News. Please subscribe and like, and leave a comment if you enjoyed this video, and let me know what other crypto-related news you'd like to hear in the future. XRP is still navigating a choppy tape, but there is a ray of hope on the chart. According to Bitcoin.com news, long-term moving averages are beginning to act like a stabilizer in what has been a bearish environment for weeks. That does not mean a breakout is guaranteed. It does mean the market is finally testing levels where trends often turn. Let's define the playing field. Long-term moving averages like the 100-day and 200-day track the market's memory. When price is below them and they are sloping down, sellers have control. When price starts to base along them and those lines flatten, it often signals that downside momentum is fading. That is exactly the dynamic highlighted by Bitcoin.com news. XRP keeps gravitating back to those averages, testing them from below, and trying to build a floor. Think in zones rather than single lines. On many charts, the 100-day and 200-day sit fairly close, creating a support and resistance band. If buyers can reclaim that band on a daily close and then hold it on a retest, market structure improves. You typically see three tells when that shift is real. First, volume expands on the reclaim. Second, pullbacks into the band are bought quickly. Third, higher lows begin to print above the band instead of below it. That is how a bearish terrain evolves into a base. Zoom out to the weekly for context. The 50-week and 200-week moving averages filter out noise even better than dailies. When price rides along the 50-week from above, it is trend health. When it tests the 50-week from below and begins to close back over it, it is trend repair. Bitcoin.com news points to that bigger picture as the reason bulls have not thrown in the towel. Multi-week closes around those long-term averages can mark the start of a fresh leg if macro conditions cooperate. Now the roadmap if bulls take control. First objective, reclaim and convert the long-term average cluster into support. Second, chew through the nearest supply shelf where recent rallies failed. Third, target the prior swing high that capped the last impulsive move. None of that happens in a straight line. Healthy advances alternate push days with quiet digestion, and they keep on showing strong dip buys into those moving averages. The bear side is simple and important. If XRP loses the long-term average cluster on increasing sell volume and fails the immediate retest, the market likely rotates back to the prior demand base. In practice, you will see wicks through support that do not get rescued by the close, a flattening bid in the order book, and momentum probes that fizzle below obvious resistance. That behavior says the base needs more time. Here is a practical checklist you can narrate to your audience while you show the chart. 1. Watch the slope of the 200-day. Flat to slightly up is your first green shoot. 2. Look for a daily closeback above the long-term average band and a clean retest that holds. 3. Confirm with participation. Spot volume should rise on up days and cool on down days. Open interest should rebuild without funding skewing to positive too fast. 4. Add a simple risk line. If price closes back under the band and cannot reclaim it within a session or two, respect your invalidation and step aside. Fundamentals that can reinforce the technical repair include steady ETF inflows when available, improving liquidity in major pairs, and evidence that on-chain activity is climbing on the XRP ledger. Those are second-order supports. The first order is always the tape. If the tape respects the averages, the story has a chance to evolve. If it rejects them, the story is not ready. Bottom line. According to Bitcoin.com news, XRP is in bearish terrain, but the long-term moving averages are finally doing their job as a stabilizer. Reclaim the band, hold it on a retest, and the path opens to challenge the last swing highs. Lose the band with momentum, and the base likely extends in time. Let the moving averages and the reaction around them be your guide. You have been watching Cryptozard News. Please subscribe and like, and leave a comment if you enjoyed this video, and let me know what other crypto-related news you'd like to hear in the future. XRP is holding the line. According to Figspire, buyers defended the 2.88 support area, and ETF optimism is fueling a push toward the 3.00 mark. That round number is the near-term gate. If bulls clear it with real participation, momentum can build quickly. Let's set the scene. Figspire notes that sentiment around a potential US spot XRP ETF has improved. When headlines lean positive, you often see price coil just under a psychological level like 3.00 as traders wait for a catalyst. That is what the tape looks like now. A clean close above 3.00 followed by a successful retest is the confirmation many chart watchers want to see. What would quality look like on a break? According to Figspire, strength shows up as rising spot volume on up days and calmer volume on dips. Order books tend to thin at the offers as price approaches 3.00. If the first push above 3.00 holds into the daily close and buyers step in on the first pullback, that says the level has shifted from ceiling to floor. There is a roadmap if bulls take control. First objective is 3.00. Next comes the supply shelf just overhead where recent rallies have paused. If price can step above that supply and hold, the door opens to retest the prior swing high from midsummer. None of this needs to happen in one candle. Strong advances usually alternate impulse days with quiet digestion days while higher lows form. There is also a clear risk line. Figspire highlights to 0.88 as the level that matters right now. If XRP loses to 0.88 on a closing basis and sellers press their advantage, the market can rotate lower to find demand. In practice, you will see failed attempts to reclaim 3.00, heavier selling into bounces, and a daily close back below recent support. If that shows up, respect it and let the base rebuild. Keep an eye on the ETF calendar and issuer updates. According to Figspire, any signs that the SEC is moving toward a standardized checklist for crypto funds or that issuers have tightened surveillance and custody language can lift confidence. If that lines up with improving liquidity on major exchanges, it strengthens the case that flows will be there to support a breakout. A simple way to track this in real time. Watch how price behaves around 0.88 and 3.00 during high-volume sessions. If bids keep appearing just above 2.88 and sellers cannot push through, buyers are defending well. If offers keep getting absorbed near 3.00 and the close holds above, that is constructive. If either side fails on rising volume, accept the signal and adjust. Here is the bottom line. According to Figspire, XRP is stabilizing above 2.88 while ETF optimism nudges price toward 3.00. Clear 3.00 with conviction and hold the retest, and the path opens to higher targets. Lose to 0.88 with a heavy close, and bulls likely need more time. You have been watching Cryptozard News. Please subscribe and like, and leave a comment if you enjoyed this video, and let me know what other crypto-related news you would like to hear in the future. Pi Network could be about to step into the spotlight. According to CryptoPodo, Pi will be a gold sponsor at TOKEN 2049 in Singapore on October 1st and 2nd, and co-founder Dr. Chengdiao Fan is scheduled to speak on real-world utility and community-driven adoption. That's one of the biggest crypto conferences of the year, and it puts Pi directly in front of founders, investors, developers, exchanges, and media. Why does that matter? TOKEN 2049 draws tens of thousands of attendees and hundreds of speakers. According to CryptoPodo, Pi's team sees this as a visibility play and opportunity to present its vision publicly, engage with the broader Web3 community, and outline how Pi aims to turn its massive user base into real on-chain activity and payments. In practical terms, this is the room where partnerships, integrations, and listing conversations often begin. Now for the reality check. The news hasn't sparked a price rally yet. CryptoPodo notes that Pi is still down roughly 15% over the past month and recently hovered around the 34-cent area, even after a brief bounce in late August. That tells you traders want more than a conference headline. They want product traction, clearer timelines, and liquidity. There's also a supply overhang to watch. According to CryptoPodo, Pi has a busy unlock schedule in September, with a record day around September 21st when more than 13 million Pi are set to unlock. That can create short-term sell pressure as long-awaiting holders get liquidity. The flip side is that unlock intensity eases after that date, which could give the market breathing room if demand improves into October. So what would count as a win next month? First, substance from the stage. If Dr. Fan uses Token 2049 to announce concrete milestones, think wallet, or payments rollout dates, merchant pilots, or clearer mainnet convertibility checkpoints, that's the kind of signal developers and exchanges can act on. Second, credible partners. Announcements with known infrastructure providers, on-ramps, or commerce platforms carry more weight than vague ecosystem collaborations. Third, user activity. If Pi can show growth in verified users clearing KYC, daily active wallets, or transactions through sanctioned apps, it strengthens the real-world utility narrative. For holders watching the tape, here's a simple framework. Use September to track how price behaves around the 34-cent support and how the market digests the mid-month unlocks. If bids keep absorbing supply until late September and liquidity tightens, the runway into Token 2049 improves. On any October headlines, look for real participation, rising spot volume on up days, orderly pullbacks that hold higher lows, and follow through after the first pop rather than a single spike that fades. Risks are obvious and worth repeating. Conference hype can fade fast if announcements are light on detail. Unlocks can swamp thin order books, especially if broader market sentiment weakens. And until convertibility and exchange liquidity are firmly in place, speculation will swing price more than fundamentals. According to CryptoPodo, that's exactly why the team is pushing for visibility now, because the community enthusiasm is there. but the market wants concrete delivery. Bottom line, according to CryptoPodo, Pi Network has a real shot at going viral next month by taking center stage at Token 2049 with a founder keynote and gold sponsor visibility. If the team pairs that stage time with tangible product and partnership updates and the September unlock wave passes without breaking key support, the story into October looks a lot stronger. If not, expect more range-bound trading while the market waits for execution. You've been watching Cryptozard News. Please subscribe and like, and leave a comment if you enjoyed this video, and let me know what other crypto-related news you'd like to hear in the future. XRP has a solid queue for setup, but a new DeFi name is stealing the spotlight. According to Cryptopolitan's latest press release story, analysts are buzzing about Mutuum Finance, a pre-sale project some claim could deliver 55x upside, even as XRP's fourth quarter outlook remains constructive. Let's start with XRP. According to Cryptopolitan, XRP is hovering around the 2.82 level after a rough week, with a consolidation band between 2.82 and 2.88. The piece notes that a push above 2.90 could flip momentum back to bullish. It also highlights a bigger technical idea on many traders' charts. A break above the 3.10 resistance, aligned with a bull flag structure, could target the $5 region if demand accelerates and liquidity deepens into year-end. One desk cited by the article even floats $5 before New Year's if institutional flows cooperate. Now the new headline grabber. According to Cryptopolitan, Mutuum Finance is in phase 6 of its presale at $0.035 per token, with the next phase priced 14.29% higher at $0.04. The article says more than $15.5 million has been raised so far, with over 16,000 investors registered to receive tokens at launch. Those numbers explain why it's trending on crypto news feeds right now. What is Mutuum actually building? The same Cryptopolitan release describes Mutuum as a dual lending DeFi platform on Ethereum. It aims to combine variable rate lending that adjusts with pool utilization and fixed rate borrowing for highly liquid assets. The project also plans a USD-pegged stablecoin intended for everyday transactions within its ecosystem. On the risk side, the article outlines guardrails you'd expect in a lending protocol: loan-to-value caps, liquidity caps, penalties, reserve factors, and an emphasis on keeping collateral healthy to limit cascades. So where does the 55x potential claim come from? If you do the simple scenario math from presale pricing in the 3-cent range to multi-dollar targets, you can get to 50 buy-plus outcomes on paper. That's the kind of headline that drives presales. But as always, price only earns those multiples if the product ships, liquidity is real, users stick around, and token unlocks don't overwhelm demand. Here's a practical way to think about both stories side by side. For XRP, the checklist is on-chain and on tape. Hold the 2.82 to 2.88 zone, reclaim to 0.90, then fight through 3.10 with rising spot volume and healthier order books. If the first pullback after 3.10 is bought and price closes strong, you've got a higher probability path toward the mid-3 south and, in a best-case flow environment, the $5 projection that technicians are mapping out. For Mutuum, the checkpoints are execution and disclosures. Does the team hit presale milestones and publish clear tokenomics, including vesting and unlock schedules? Do audits and security reports arrive before mainnet features go live? Does the stablecoin launch with credible backing and transparent attestations? And most importantly, do real borrowers and lenders show up with sticky usage, not just a day-one pop? It's also important to underline what Cryptopolitan labels this article as a press release. That means it's promotional content from or on behalf of the project. Treat it as a starting point for research, not an independent endorsement. Presales are volatile and carry extra risk. Smart contracts, custody, liquidity, and unlocks can all impact price faster than most newcomers expect. What to watch next? For XRP, daily closes around 2.90 and 3.10. ETF-related headlines and whether spot volume expands on green days and cools on red days. For Mutuum, whether Phase 6 actually rolls to Phase 7 at 0.04 on schedule, whether the raise figures keep updating transparently, and whether the team ships a working lending product and stablecoin with clear, verifiable backing. Bottom line. According to Cryptopolitan, XRP's queue for setup remains intact if key levels are reclaimed, but speculative attention is rotating to Mutuum Finance as its presale advances. If XRP clears resistance with volume, the path to the summer highs reopens. If Mutuum executes and converts hype into real usage, the presale narrative can carry further. Manage risk on both fronts and let the date not the headlines guide your next move. You've been watching Cryptozard News. Please subscribe and like, and leave a comment if you enjoyed this video, and let me know what other crypto-related news you'd like to hear in the future. Could XRP really sprint to $10 next month? According to Forbes' Great Speculations column published today, it's possible if October's rule-making window unlocks US spot XRP ETFs and momentum builds the way it did around prior crypto ETF approvals. Forbes frames October as a catalyst month because the SEC is approaching final decision deadlines on multiple spot XRP ETF filings. That shift from open-ended delays to hard decisions is the kind of calendar the market trades, and it's why you're seeing pre-positioning across XRP pairs right now. Yahoo Finance has been flagging the same October window, noting that traders are gaming out how a rules-based greenlight could funnel traditional capital into XRP for the first time at scale. Let's connect the setup to the tape. If headlines turn constructive, price tends to coil under obvious levels, then expand quickly as liquidity chases. For XRP, that playbook means defend the mid-twos on dips, reclaim round numbers with a strong daily close, and push into visible resistance from the early summer highs. None of this requires a parabolic candle in one day. The healthiest runs alternate impulse days with quieter digestion while higher lows stack. The case for $10 is a flow story as much as a chart story. According to Forbes, a spot ETF unlocks a new class of beer that prefers regulated wrappers over direct custody. Typranks highlights the same point. Once exchanges have an approved rulebook and issuers meet the checklist on surveillance, custody, and pricing, you can see steady, programmatic demand that doesn't care about intraday swings. That's the environment where breakouts stick. There are two big tells to watch if you're trading the headlines rather than the dream. First, participation. A real shift shows up as rising spot volume on up days, healthier order books, and derivatives open interest rebuilding without frothy funding. Second, behavior on retests. If XRP clears a key level on news and then holds that level on the first pullback, buyers are in control. If it loses the level immediately, it's a headline fade. Now the risk side. October can still disappoint. The SEC could narrow what qualifies, slow walk implementation, or push issuers into more revisions. Macro can also cut across the story. Barron's reports that markets are fixated on the Fed's next rate decision after the latest CPI print. If risk appetite sours into the meeting, even bullish crypto headlines can struggle to lift prices. And remember the market cap math. A straight shot to 10 implies a multi-trillion valuation. That usually requires time, liquidity, and genuine adoption, not just one filing. How to navigate it without getting chopped up. Define your invalidation before you enter. Scale into strength after confirmation, not before. Separate trades from investments so a headline day doesn't derail your long-term plan. And keep your eye on the calendar rather than the noise. Issuer amendments, exchange rulebook updates, and the SEC docket are the signal. Bottom line. According to Forbes, October's ETF decision window gives XRP a credible runway for a bigger move if approvals land and flows show up. If the checklist clears and price can reclaim key levels with real participation, the path higher opens. If approvals slip or the first wave of demand underwhelms, expect more base building before the next attempt. You've been watching Cryptozard News. Please subscribe and like, and leave a comment if you enjoyed this video, and let me know what other crypto-related news you'd like to hear in the future. Who actually owns the most XRP in 2025? According to Cointelegraph's rich list breakdown published today, the answer is clear: Ripple Labs. The report says Ripple controls about 42% of the total 100 billion XRP supply, split between roughly 4.5 billion XRP in liquid holdings and about 35 billion XRP locked in escrow. That escrow unlocks on a predictable schedule, typically 1 billion XRP per month, and Cointelegraph notes Ripple usually relocks a majority of what it doesn't use, which slows net issuance over time. What does that mean for the market? According to Cointelegraph, Ripple's large stake is a double-edged sword. On one hand, the company can provide liquidity for payments and market operations when needed. On the other, concentration raises decentralization concerns because a single actor influences a big chunk of supply. The important nuance is behavior. If Ripple consistently relocks a large share of each monthly release, it dampens supply pressure. If it spends more, it can increase circulating supply faster. The largest individual holder is also in the report. According to Cointelegraph, Ripple co-founder and executive chairman Chris Larsen controls over 2.5 billion XRP across 8 tagged wallets, making him the biggest non-corporate holder. The article points out that some of those wallets made notable transfers during July when price strength invited profit-taking. Even so, Larsen's aggregate position still represents a significant slice of the market and can move headlines whenever large transfers appear on-chain. Exchanges are the next big line on the rich list. Cointelegraph says Korean giant Upbit sits on roughly 6 billion XRP in custody, reflecting strong demand in that market. Binance follows with more than 2.7 billion XRP across multiple wallets. Uphold has climbed toward nearly 2 billion XRP, and Coinbase sits around 780 million XRP after trimming reserves since the second quarter. The article stresses that exchange balances are primarily customer assets, so they tell you more about where retail interest is concentrated than about house positions. How concentrated is ownership overall? According to Cointelegraph, only 100 addresses control about 68% of the circulating supply in 2025. Another data point in the piece, to crack the top 10% of the rich list, you would need about 2,396 XRP, which works out to roughly a few $1,000s at recent prices. That highlights a split between a handful of whale and institutional scale wallets and a long tail of smaller holders. There's also a whale behavior trend to watch. Cointelegraph reports that 2025 saw a record number of wallets holding more than 1 million XRP, reaching to 1,708 addresses in June. At the same time, XRP ledger activity spiked to around 195,000 daily active addresses that month. That combination, more large holders and more on-chain activity, suggests growing participation on both the institutional and retail side as legal clarity improved this year. So how should traders read this rich list? First, remember that concentration cuts both ways. Large, visible treasuries and exchange balances can provide liquidity and smoother markets during uptrends, but they can also amplify price moves if big holders rotate. Second, the escrow schedule matters. According to Cointelegraph, the predictable 1 billion monthly releases and frequent relocks mean you can monitor supply dynamics rather than guess them. Third, watch exchange reserves by region. Rising balances at a venue like Upbit can hint at regional demand waves that spill over into global price action. What to track next if you want signals rather than stories? Follow Ripple's monthly escrow activity and relock percentages. Keep an eye on the labeled Chris Larsen wallets for unusually large transfers. Monitor exchange reserve trends at Upbit, Binance, Uphold, and Coinbase for changes in retail positioning. And check how many wallets hold more than 1 million XRP as a proxy for whale accumulation or distribution. Those are the levers that turn a static rich list into a living market narrative. Bottom line, according to Cointelegraph's rich list for 2025, Ripple Labs remains the dominant holder with a mix of liquid and escrowed XRP. Chris Larsen is the largest individual holder, and exchanges like Upbit and Binance command billions in customer balances. Ownership is highly concentrated, but on-chain participation is rising. If you map those facts onto escrow behavior and exchange flows, you'll have a clearer read on where XRP could move next. You've been watching Cryptozard News. Please subscribe and like, and leave a comment if you enjoyed this video, and let me know what other crypto-related news you'd like to hear in the future.